Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Marriott reported second quarter earnings that beat estimates. As booking demand drove higher room prices in the U.S., but the stock's down, so I'm guessing their forward guidance wasn't that great. So let's check in with an expert on all this stuff. Brian Egger, Senior Gaming and Lodging Analyst for Bloomberg Intelligence, joins us live here in our Bloomberg Interactive Broker Studio. No Nantucket office for him. Talk to us about Marriott. What did they release today?
So Marriott had an above expected level of revenue per available room growth. We like to call it RevPAR.
Yep, I know that.
And they also raised their full year metric as well. So there was some second half upside. So okay. I don't think they really lowered guidance. There may have been some expectation that the third quarter could have been even higher. They got a bump in the second quarter, and they'll get some of that in the third quarter from the World Cup.
Right.
I mean, the weak spots globally are obviously the Middle East, and there's some pockets of weakness, but overall, quite strong. I think the outlook may have been people were looking for a bit more, but taking a step back, it was overall a pretty positive print.
So for these full service hotel groups like Marriott, Hyatt, Hilton, they have like a million brands, right? They really segment the market.
30,
is
31,
that right?
31 if you count Bonvoy for Marriott. Yeah.
Well, I'm a Bonvoy thingamajig person. I guess that worked, right? I mean, that's proven to be the way to cut this market up.
Yeah, they report separately trends for luxury versus mid-scale versus limited service, and there have been differing trends since we emerged from the pandemic. But it does benefit them to have different segments. Overall, they skew a bit more upscale and luxury than, let's say, Wyndham or even Hilton.
Okay.
A little bit more like Hyatt.
So they see, I presume, the K-shaped economy out there. Is that, in fact, reflected in their results?
To a large degree, although I think increasingly the CEO of Hilton last quarter used the term C-shaped, which is interesting because I think what you're seeing is upscale luxury is still quite strong, but the limited service, which had been lagging in last year or two, is actually coming back.
Really?
And I think we're seeing a bit more strength in that part of the business, whether it's business travel or leisure travel.
So are these companies like, again, Marriott, Hyatt, are these global companies?
Yeah, I mean, they are. And so when they disclose the results, you get a picture into what's happening in Asia, Europe, Middle East, Africa, Latin America, as well as the U.S. So they are quite global.
It's interesting. I think a lot of businesses today that over the last decade, or maybe even more, are really investing in the Middle East, UAE, Dubai. I mean, that area.
And the casinos too, Wynn.
Yes,
casino
exactly.
There.
Are they rethinking that now? How are they, are they getting... that's over there. That's not us. Don't worry about that.
Yeah, I don't think they're rethinking it, but obviously a major tragic world event happens and then it affects their overall growth. Like, for example, in the second quarter for Marriott, RevPAR in the Middle East is down 43%. Not surprising given the level of disruption. I think the expectation is if you get a normalization in the geopolitical climate, that growth will come back. But obviously near term it has had an effect. And there's also been a little bit of a slowdown, not much, but a little bit in new openings and the pace of net unit growth or room growth because of some opening or construction delays in the Middle East as well.
Interesting. So how about here in the U.S., what's the industry doing capacity-wise? Are we building new hotels? Are we refurbing existing ones? What's going on?
Yeah, there's kind of a mid-single digit rate of overall growth. Now, some of that is new construction. Some of that, and it's true in the case of Marriott and Hilton, comes from conversions. So you basically get non-branded Hilton branded hotels or not Marriott branded, and so some of that room growth is from conversions and not necessarily new ground up construction.
All right, it's been 10, 20 years of the Airbnbs of the world. How is it all shaken out with that segment? I'm not sure what the term is for the Airbnb part of the world versus hotels. Yeah,
I mean, first of all, remember some of these entities have the equivalent of a vacation ownership type interest type of experience. And I think for a price sensitive short-term bookings window leisure customer, it had some effect on the margin. But I think the overall perception is that the leisure consumer and traveler, particularly for high-end stays, has been really resilient. And that's kind of the sweet spot of a Marriott.
Because I see some of these Courtyard by Marriott or some of the lower ends, I mean, they are dominated by travel teams. You pull into there and then, you got like 27 lacrosse teams or ice hockey teams. That's a part of the business that didn't exist a while ago.
Yes. I mean, it's a different type of experience and travel purchase, obviously, if you're looking at a vacation ownership or a home renting for a short term, but it does not seem to have detracted in any way for the overall leisure travel strength.
That's amazing because you think about all the Airbnb inventory that's come onto the market.
Yeah. I mean,
at one point we thought
there
it was
are
gonna
individual consumers that certainly will choose one over the other.
Yep.
But overall, I think it represents a very niche segment of the market. So,
all right, very good. Marriott stock trading down about 7% today, but it's up 12% year to date. It's up 35% over the trailing 12 months. So some pretty good numbers. And those are similar kind of performance we've seen from some of the other hotel stocks. Hyatt, Hilton are all up 20-25% on a trailing 12-month basis. So people are going to the hotels, staying at the hotels, apparently. Brian Egger, thanks so much for joining us. Senior gaming and lodging analyst. He's been doing it forever, folks. I'm telling you that. Bloomberg Intelligence, but he comes into the studio because he's a professional. So that's how we roll here.